Okay, good morning, everyone, and welcome to Financial Lynx Broker Webinar, particularly for real estate financing. My name is Juan Cavang, and I am the managing partner and founder here at Financial Lynx. Thank you for joining today's call. I look forward to hopefully you guys learn something new and we can continue to do some business together. Before we get started, a few housekeeping rules. First, everyone's going to be on mute for today's presentation. If you have any questions, please utilize the chat feature there. We'll get to all the questions at the end of the presentation. So with that being said, let's get started. So Financial Lynx, let's go through here. Oops, went too fast. Okay. So some of the topics we're going to talk about today. First, what is Financial Lynx and what is the Financial Lynx Platform? We're going to talk a little bit about the types of properties that exist. We're going to talk about residential financing options, commercial financing options, ground up construction projects, how to submit files to Financial Lynx, and ultimately, and most important, how do you get paid for referring deals to Financial Lynx? And then at the end, we'll have some question and answers. So who are we and what is the Financial Lynx Platform? We're a group of bankers. We founded Financial Lynx in 2019. We were in conventional financing, Citibank, Capital One, Wells Fargo, amongst others. What was going on in the banking world is conventional financing is it's conventional and it's difficult to get financing. And what we found is that the major banks out there don't have the products and services that investors look for when they're seeking financing. So we left banking to find alternative financing solutions for real estate investors. What we did is that we had to screen hundreds of financial institutions throughout the country in search for institutions that offer common sense financing, stuff that makes sense for investors. Simplicity is very important to us. So we took all the data points that all these lenders and banks have in order to get approved, and we created a platform that allows us to access hundreds of alternative financing solutions instantly. So ideally, we become a one-stop shop for real estate investor financing. So let's talk about the types of properties that exist. First, we have to talk about the two main components of the types of properties. First, there's residential, and second, there's commercial. The difference is sometimes people hear residential and they think that it's for an owner occupied, like I'm buying a property for myself. But residential actually falls under investment as well. So residential properties are condos, single family homes, and multifamily residential units up to 4 apartments. Now, co-ops also fall under residential, but we do not finance co-ops. Now, there's also commercial. Commercial, there's multifamily for 5 apartments and up. There's mixed use properties, which means that there's a retail, some sort of storefront or something like that in the ground level, and there's maybe apartments above. So it's mixed use. There's industrial, which is your warehouses, your manufacturing facilities, things like that, storage units. There's office, which is, if you think about a medical building, there might be multiple medical doctors in one building, or multiple professionals. There's retail, which is you walk outside, you see a storefront, a restaurant. Maybe you go and you see a strip mall that may have multiple storefronts. Those are considered retail. And I put in here that sometimes you might have let's say a restaurant that's a standalone restaurant. In financing, those are a little more challenging, so they're not preferred industry, but we may be able to finance those as well. And then lastly, there's going to be the specialties. The specialties are going to be your hotels, your gas stations, your mobile parks, self-storage, golf courses, things like that fall under the specialty category. What we're going to do is we're going to talk about what financing options are available for both residential and commercial. So first, residential financing. Now, there's long-term mortgages and there's short-term mortgages. So long-term mortgages are essentially if you're gonna hold something for a long period of time. What I want to specify here is that when it comes to residential financing, we do not finance owner-occupied properties. You need a special license for that, and we're not a mortgage broker for, let's say, FHA, or if you're going to buy a property to live in. We only work with investors. For investors with a long-term mortgage option, you can use it to purchase a property, you can use it to refinance an existing property, or you can use it to cash out of a property. These mortgages are typically 30-year mortgages, could be fully amortized, which means a 30-year fixed mortgage, or you can do a 30-year fixed mortgage with an interest-only option, which means that maybe for the first 7 or 10 years of the mortgage, you may only pay interest only. We utilize that when sometimes there's not enough rental income to support the mortgage. Maybe an interest only option would allow us to be able to support that for a period of time. The beautiful part about these mortgages is that there's no tax returns required. The way we underwrite these files is by utilizing the rental income that's generated from the property versus the mortgage taxes and insurance, the total mortgage payments. That if the rental income can support the mortgage payment, ideally we have a deal that we can finance. We also put in there that we can actually finance Airbnb properties. The way we finance Airbnb properties is that we take the 12-month historical performance of the Airbnb. If there's enough income to support what our new mortgage taxes and insurance payment is going to be, again, that's a deal that we can finance. Another great product about this is that we can actually finance foreign national, as we'll say, foreign national or ITIN borrowers. So, for example, if you have someone that's not a U.S. citizen and they want to invest in properties here in the U.S., we can finance those types of companies. Vacant properties are okay, but only on purchases. What we do on purchases, if you're buying let's say a 3-family residential property and it's completely vacant, we are going to utilize the market rent of that particular property in order to generate the potential income of that property. And again, if it can support the mortgage payment, we have a deal with it we can do. Now, if you currently own the property and it's vacant, then that's a concern because, hey, why is it vacant? Is the property habitable? Does the property need to be renovated or something like that? So we need to understand what's going on. If you currently own a property and you're refinancing it, and if it's vacant and it's not generating income, we need to get the story behind it. Now, these loans start at about 100,000 loan amount. So that's particularly we're doing about an 80% loan to value on these. So ideally, like $130,000, $140,000 appraised value of the property will get you at about $100,000 loan amount. So that's very important that we want to be at least $100,000 loan amount out the door. The rates are going to depend on the loan to value and the FICO score. It is a matrix, so depending if you want an 80%, loan to value property, and your FICO score is, let's say, 640, your interest rate is going to be a lot higher than if you have a 50% loan to value property and your FICO score is 800. So we don't put the rates on there, but they vary depending on the again, your position. These residential loans close in about 21 to 30 days. They're relatively quick. If the client already has a title report complete, then it can go even faster. So, but typically we're closing this in about 21 to 30 days. Now, those were our long-term options. Now, in residential, we also have short-term options. Short terms are, for example, a fix and flip loan. You're purchasing a vacant residential property with the intention of rehabbing it and adding value. One of our best programs with this is that we can actually finance up to 100% of the purchase price and up to 100% of the rehab. Again, the rates are going to vary depending on, the leverages and your experience on these. We look at 75% of the after repair value as another metric. So, for example, if you're buying a property for $100,000 and you're putting down $50,000 of rehab into it, your total cost on that project is $150,000. We can finance 100% of the purchase, 100% of the rehab, as long as the after repair value, what the property is going to be worth after you do the construction, we're going to, as long as $150,000 does not exceed 75% of your after repair value. These loans are, again, short term, they're interest only. The reason is that interest only is that we want to allow you to have time to rehab the project. We don't want to give you a big mortgage payment while you're doing the construction, especially when this property is not generating any income. Again, we want to be loan amounts starting at about $100,000. Experience is preferred on these, and we can close in as fast as 2 weeks with these. What's great is that, nowadays you're going to have foreclosures are going to start coming back with the change in the industry. Someone needs to buy something quick. They have a timeline to do it. They find an opportunity. These loans can close in as quick as 2 weeks. As long as your investor is prepared with the scope of work, what is he going to do to the project? He's prepared with all his finances and everything. We can get that done for you. These fix and flip loans also do not require tax returns. These are quick. We underwrite the property itself on these, and again, it's meant for investors that are looking to rehab. Next, we have so hard money loans. You might hear that in the industry, and bridge loans. They kind of all fall under the same category of these short-term loans. However, a hard money loan is if you find a vacant property, or you're going to buy a property and it doesn't cash flow, it doesn't generate enough income to support a mortgage, but you see the opportunity, you think you're going to get the tenants out or something like that, and you see a long-term vision, you may take a hard money or a bridge loan. Again, a short-term loan. These loans are going to be somewhere around 12 months to about 24 months. They're going to be interest only, and they're going to have a balloon payment at the end of it. We can use this for a purchase or a cash out. We've seen where maybe someone may have inherited a property from a grandparent or something like that, and they want to leverage that property to get some money out. They're able to do that, take the money out, maybe rehab the project, then maybe rent it out and keep it long-term, or rehab it and then send it out. But these are cases where, again, you don't want us to finance the rehab. Maybe you just want, again, you have the property, you don't want us to finance the rehab, you're going to do it yourself or something. You may want to take a bridge loan or a hard money loan. These can actually close the fastest. We can close these in as quick as a week. We've seen it as fast as 5 days. We had a situation where someone was going to get some financing, and the financing, I think it was when a lot of these mortgage banks were closing. They had an opportunity to buy. The mortgage bank couldn't come up with the financing, and they needed to close within a week. The title was done, appraisal and everything was done, and they said, hey, we have a no mortgage contingency, we need to close quick. They came to us, they had all their documents prepared. We were able to put them in touch with an investor that closed within a couple of days. So we have the ability to close relatively quick with these hard money and bridge loans. So next, we're going to talk about what commercial financing options are available. Again, commercial, we're going to talk about, first, let's talk about owner occupied. So in residential, we talked about that if you're living in the property, if it's a residential property, you're living in it, we cannot finance that. However, when it comes to commercial financing, owner occupied properties, which means you have a business that's occupying that particular property, those are actually preferred. Those are going to get you the best rates possible. These require tax returns. The business must show enough profits and able to cover the loan. So we're going to underwrite. We're going to look at the financials of the business, and we're going to say, hey, do you make enough money in order to cover the mortgage payments? That's the only way we can identify if this is going to be a good loan for us or not. The good thing about these rates, again, they can start in the mid to low 7s, owner occupied. Typically 25-year terms, and the loan amounts start at about $300,000. Now on the left, you're going to see if the business owner occupies more than 51% of the space, they may qualify for 0% down on a purchase. 0% down. Phenomenal. It's by our SBA 7A and 504 programs. The business does need to have strong business financials and personal financials. If for whatever reason they do not want to go the SBA route and they want to go a conventional financing route, then they're going to have to put down at least 20%. With these, again, purchase, refinance, or cash out, they all can be done as long as the business shows enough profit to support the mortgage. Next, let's talk about commercial investment mortgages. Okay. Again, we can do this with a purchase, refinance, or a cash out. Ooh, excuse me, went too far. We can do this with a purchase, refinance, or a cash out. Minimal documentation. When we look at commercial investment mortgage, we want to again see that the property generates enough income to support the mortgage. That is the most important part. Can it support the mortgage? We may look at some corporate document, tax returns in these, but sometimes it's just really to verify that you've been filing and that you have no back taxes or anything like that, but it's not utilized for the primary underwriting of these, of this property. Again, the rent needs to cover the mortgage, taxes, insurance, and maintenance. These loans go up to 30 years, and the loan amounts start at $200,000 and above. We need a FICO score of about 650 for long-term mortgages, these 30-year mortgages. And as you can see, I'm going to remind you guys the types of properties that fall under the commercial investment. We have multifamily, again, 5 apartments and up. We have mixed use, industrial, medical buildings, retail, and your specialty. Now, just like in residential, for commercial properties, we have these short-term bridge loans and hard money options. Again, these are vacant properties or properties that do not generate enough cash flow to support a mortgage. The terms on these can be anywhere from 6 months to 24 months. We can go up to 70% of the appraised value of the property, or should I say of the as-is value of the property. Interest-only payments, rates start at around 10%. We want to see loan amounts of $250,000 and above. And again, with these hard money loans, we can close in as quickly as a week. We have many options where we've done properties like this, but typically what happens is someone either has an opportunity to buy a property and they need to move fast. Sometimes they're competing with an all-cash buyer. Since we're closing in as quickly as a week, we can compete with those all-cash buyers, or they've had some long-term financing in place and for whatever reason it fell through and they need to close quick because they may not have any mortgage contingencies. So this is where bridge loans and hard money options would qualify. Next we're going to talk about our ground up construction. Now, what is ground up construction? If you're essentially buying a piece of land and you're building something from the ground up, that falls under ground up construction. Or if you're buying a property that's already existing and you plan on knocking that property completely down and then building something up brand new, that again falls under ground up construction. We do not, again, finance. If you're buying a piece of land and you're building a house where you plan to live in, that is not something that we can finance. So I want to make that clear. We only work with investors and developers. The type of projects that we like for ground up construction is essentially single family homes, condo units, multifamily, or mixed use where there's a majority residential portion of it. Ground up hotels and other specialty is not that's favorable for us, but we want to focus on what we're really, really good at, and that's these options here. We're currently doing a 35 unit. The investor actually doesn't know if he's going to sell it off as condos or if he's going to sell the whole thing at once, but we're doing a $17 million 35 unit in North Carolina that we should be closing in about 2 weeks. So we have the potential to do small projects, 500,000 and up, or 20, $30 million projects. You have access with Financial Lynx to do both. When it comes to these, we prefer if the permits and plans are already complete. A lot of times they've purchased the land already. They put they've utilized all the permits and they've gotten everything that they need. And essentially they become what we call shovel ready. They're ready to break ground. Once they get this financing, they're ready to break ground and start doing the construction. That's what's preferred, and that's what we like the most. And that's what's gonna, if you see an opportunity like that, that's gonna get you the highest chance of success with us. If you have a client that's very early stage that wants to buy land, typically the smaller the project is something that's more favorable for us. If you're doing a 1 to 4 family, ground up construction, we may have the ability to kind of help you with the land as long as we're doing the construction for you, the construction project for you. The reason for that is just it's a little easier to get a permit and things like that for a small project than it is for a 35 or 40 unit complex. Very important with this ground up construction is that you have to have experience. We do not work with newbies on this. On the fix and flip, we may work with a newbie on this, but ground up construction we do not. These are very complex projects that take experience. We finance up to 85% loan to cost. So what is loan to cost? Loan to cost means that if your total project, your land, your soft costs, which are your architectural drawings, your permits, everything like that. Let's just say your total cost to build from start to finish is going to cost you $1 million. Okay, we have the potential to finance up to 85% of the $1 million. So we're going to finance $850,000 to complete your project, and we're going to want you to get to provide $150,000 equity injection into the project. We want to see that up front. We finance when it comes to ground up construction. We finance everything on the back end. So the total project is $1 million. We're going to finance 850. You have to come up with $150,000 up front, and then we're going to finance the project till its fruition. Depending on the size of the project, we can provide loans actually in as 6-month loans if it's a very small project, all the way up to 36 months if it's a very large project. The project we're doing in North Carolina is $17 million. I think we gave the client 24 months with 2 6-month extension options. So he gets up to 36 months to be able to complete the project. When it comes to ground up construction, we want to see loan amounts at least $500,000 and above. Rates again starting at about 10%, and interest only is going to be your required monthly payment on these. Now, how to submit to Financial Lynx. So all brokers that are signed up with Financial Lynx will receive a welcome package, which will include the real estate cheat sheet for submission. On the right is a sample of the real estate cheat sheet. It'll talk about what type of loan you're planning on doing and what's required for us to underwrite the file. So the first way, if it's a residential type of loan, you can easily go to www.financiallynx.com/real estate, input all the information of the property. It'll go directly into our processing team, and they'll start working on your file. The second thing you can do is if you have some of the information, you can email realestate@financiallynx.com. Again, that would also go to our processing department, and they'll start working on the file. However, if you're emailing it, just try to send as much information as possible. When you go to the link, it's going to actually ask you the questions that we need to know to underwrite. Sometimes when brokers send us files, it doesn't have all the information that we need, so it's going to be a lot of back and forth. The link is going to ask all the questions you need. And the third way is that if you're signed up with Financial Lynx, you're going to have a dedicated account manager. You can always contact that account manager, run through the scenario. They'll let you know if it's something that we can or cannot do. So 3 ways to submit a file to Financial Lynx. Our goal always is to get you a quote within 48 hours. So you send us the information that we need. We'll send it out to our investors, our banks, and our private lenders. And ideally in 48 hours, we should have some quotes for you to start working on. On the right also is the second part of the cheat sheet that talks about the other ways to submit loans to Financial Lynx. So how much can I earn by working with Financial Lynx? All real estate transactions, some of you may or may not know, are protected on a HUD statement. In the HUD statement, it would identify what the broker fees are for the particular transaction. The referring agent makes 50% of all total broker fees. The expected commission that you'll get is roughly between 1 to 2.5% of the total loan amount. Again, we would go over what the total broker fees during the quote stage, and you can say, this is how much I want to earn. We let you know how much you have to sell the particular broker fees for. But the goal is always to make 1 to 2.5% of the total loan amount. So why work with Financial Lynx? Ideally, we're a one-stop shop for real estate financing, right? We have all the products and services that you look for. you may be a broker that specializes in a particular product. A lot of times you do not have the time or the resources to go out and source a particular transaction for a client. Or you may spend 1 to 2 weeks sourcing it, come to find out that that particular lender cannot execute your loan. So we become a one-stop shop, easy to submit the referrals, and we handle everything for you to the closing table. So all you have to do is just sit back and get paid. So with that being said, that concludes the presentation, but we're going to open things up for question and answers. I'll show here. Again, if you have any questions, please write it in the chat and Arthur will moderate.
So we have our first question here from Mr. Sharda. Do you lend in rural areas, South Texas? Question mark.
The answer is,
Sorry.
let me mute this. Yeah, the answer is yes and no. Every particular transaction is different. What we do is we take the information, we'll present it to all our investors, and if it is something that's appeasing to them, then we will finance. We have done rural areas in the past, but again, it has to be a project that has interest to our investors and lenders. So what I say is don't overthink it. Take the information that we need, and we'll let you know, hopefully within 48 hours, if we can or cannot do the file.
Thank you for that. Next question. Have you done hospitals?
Hospitals falls under specialty. I know we worked on a couple, but I cannot say that we've executed on a hospital. When it comes to the specialty properties, there's just not a big appetite for it. So it becomes very challenging to source. But I know we did have some, we did work with one. I think we presented, but at the end of the day, it didn't work out for them. So I wouldn't say go out there and shop hospitals. If something comes across, again, just show it to us. Let us see if we can source it, and we'll let you know quickly if it's something that kind of works for us or doesn't work for us.
All right, that's it's all right. Another question just came in. What options do you have for larger build for rent single family home communities? 75 plus single family homes broken out into 4 phases. Builder developer with equity in the land looking for some horizontal infrastructure financing plus the vertical by subordinating the land.
Thank you for that question. Very detailed. So, build for rent options, again, fall under our ground up construction. We've been able to finance up to 85% of the total project. Now, if it depends what stage they're in. If you said they're raising equity. Hold on a second. Builder developer with equity in the land. Yeah. So anything that the builder has already shed out. So, for example, if he's purchased the land, if he's done all his soft costs and everything like that, we give him credits as part of his 15% equity injection. So, if again, going back to my example, if the total project was $1 million, we're comfortable financing $850,000. If he's bought the land and everything, and he's already dished out $150,000 equity injection, then we're financing the rest of that project. So as long as he's kind of kept his finances in order and can demonstrate what everything costs, we're going to finance that. So that is definitely a project that we can work on. Please reach out to us, and we'll let you know what's needed in order to kind of get you some quotes on that.
Okay, that is The last question we have on the list. Austin says thanks. One. Any other questions, guys? We're here. We're here. We're here to answer any questions you have.
If someone is on their phone and doesn't have the chat feature, you can unmute yourself and ask the question as well. So, all right, guys. Well, I don't see any more questions coming in. Again, feel free to reach out to us at any time. If you do have questions, we're always available. That's our value proposition here, is that we're accessible. So with that being said, thank you for joining today's call. This call has been recorded. If you have team members that would like to view the recording, please let us know and we'll send them a copy. But thanks again, and we look forward to working with you.